Hello everyone, PS from PS Invest Plays here today. Since March 2020, Home Depot's stock price has more than doubled. In Q2 2021 earnings, Home Depot's same-store sales rose a healthy 4.5% year over year, but it underperformed Wall Street's estimates, and the stock price fell 4% on the news. Is this trend going to continue, or we can expect higher stock price in 2021 and beyond? In this video, we will understand its business, its financials, its future outlook, review its charts using Elliot wave theory to see how we can make money. So stick around. I think you'll like what I have in store for you today. Home Depot, ticker HD. Home Depot is the largest home improvement retailer in the United States, supplying tools, construction products, and services. The company is headquartered in Cobb County, Georgia, with an Atlanta mailing address. Home Depot sells various building materials, home improvement products, building materials, lawn and garden products, and decor products, as well as provide installation, home maintenance, and professional service programs to do-it-yourself and professional customers. Home Depot is not a disruptor with some new technology that could become obsolete by a new product entering a market. It worked on growing its business by utilizing existing technology and taking advantage of trends in the home repair market. The result has been significant cash flow, allowing it to continue to reinvest while also returning capital to shareholders both through the dividend and share repurchases. Home Depot achieved success largely by being out in front of demand. It announced a new One Home Depot investment program in 2017 that consisted of a multi-year plan for an $11 billion investment to build the company's online channels and merge the digital and physical shopping experience for customers. That began paying off even prior to 2020, but was extremely successful in taking advantage of the surge in home remodeling in 2020 and 2021. Home Depot also acquired HD Supply, a supplier of maintenance, repair, and operations products, in an $8 billion deal announced in late 2020 to refocus on the professional contractor base. The results have been phenomenal over the last year. For fiscal 2020, revenue increased 19.9% versus fiscal 2019. Comparable sales for the year also increased about 20% overall and slightly higher in the US. That success has continued into 2021. In the year's first quarter period ended May 2nd, sales soared 33% over the prior year period. Home Depot management continues to innovate. It has 1,300 rental locations and just launched a rent online, pick up in store program in June. It allows both professional and do-it-yourself customers to conveniently check equipment availability and reserve what they need in advance to get in and out of rental centers more quickly. Both Home Depot and Lowe's recently reported their second quarter financial results to mixed Wall Street reactions. While on the surface, these giants in the home improvement business might appear similar, there is a very important difference that makes Home Depot the higher quality business between the two. During Q2 2021, Home Depot's same-store sales rose a healthy 4.5% year over year. However, this underperformed Wall Street's estimates, and the stock price fell 4% on the news. Lowe's, on the other hand, saw a 1.6% decrease in comps compared to Q2 2020. But because management raised the full year sales outlook, the stock price popped 10% the day after Lowe's announced results. Both of these companies are coming off massive demand spikes from 2020. Consumers increasingly focused their attention and dollars on renovation projects last summer. So regardless of the market's negative reaction, this makes Home Depot's gain that much more impressive. It was able to continue expanding comps against a difficult comparison, and that helps to explain a significant advantage Home Depot has versus Lowe's. Compared to Home Depot, which generates 45% of its revenue from professional or pro customers, Lowe's derives a much smaller, approximately 25% of its sales from this highly sought after group. Pro customers are stickier and spend more. So this has major implications for the fundamental performances of Home Depot and Lowe's business. During 2020, people held off on bigger renovation projects because they didn't want outsiders inside their homes. This was obviously a boon for Home Depot, but more so for Lowe's, since do-it-yourself customers account for a larger share of its business. Things have changed over the last 6 months of 2021. Home Depot has seen pro business strengthen for several quarters in a row, with the last 2 quarters where the pro outperformed the DIY customers for the first time since 2020. While transaction counts were down year over year for both Home Depot and Lowe's, Lowe's experienced more than double the percentage fall than Home Depot did. And the growth in big ticket purchases, those over $1,000 at Home Depot, grew 24%, again demonstrating the comeback of the pro customer. Having more of its business dependent on professionals has also resulted in higher margins for Home Depot, which leads to greater profitability. Looking at the financials for Home Depot, revenue, gross profit, EBITDA, net income, and earnings per share (EPS) are extremely good. Home Depot dividend for its common shares now stands at $1.65 per share quarterly, or $6.60 per year. At its current price, that amounts to a cash return of 2%. To put the payout into perspective, the average dividend yield for the S&P 500 is 1.3%. Home Depot has been paying dividends since 1987 and is also increasing them yearly. It did not cut its dividend in 2020. Instead, it increased it, which is remarkable. In May 2021, Home Depot also authorized a new $20 billion share repurchase program. Many analysts continue to suggest that Home Depot stock is overvalued. I disagree with that notion. Home Depot is a very mature company that still has plenty of room for future growth. The company's success will only accelerate moving forward. Considering the earnings multiples over the past 5 years and growth potential, the company's valuation becomes far more reasonable, thus emphasizing the importance of a long-term approach. This is also indicative in the charts, where I see the stock price to increase considerably in the next 4 to 6 years. Now, let's look at the charts for Home Depot. If you like this video, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. The bull wave that started for Home Depot way back in the 1990s is still not over. It has completed its first 4 waves, and now it is in its wave 5, which is the final wave of Elliot wave. Well, if we look deeper in this wave 5, we can clearly see that the first 2 waves are completed, and now Home Depot seems to be in its strongest bull wave, which is wave 3. Wave 3 is typically a 200% increase of waves 1 and 2, which means it gives us a price target of $554.07. At this price point, I expect a retracement, a 38.6% retracement or pullback in the stock price of Home Depot, bringing the stock price down to $423.88. After this retracement is completed, I expect wave 5 to resume, taking the stock price to $635.11, which means it's a 96% profit from its current stock price. You can expect this price in the next 4 to 6 years. Now, let's summarize. As I said earlier, the current stock price is an excellent entry point. I do not think Home Depot stock is overvalued. In the long term, which is 4 to 6 years, you can expect the stock price to hit $635.11, giving us a profit of 96%. And the icing on the cake is that Home Depot pays $1.65 per share quarterly in terms of dividend, which translates into $6.60 per year. That amounts to a cash return of 2%. What do you think of this analysis? Please leave me a comment and let me know. As always, please don't forget to subscribe, hit the like button, and hit the notification bell icon so you're notified when I upload a new video. Until then, bye-bye.